Assalamualaikum warahmatullah. So inshallah today I'm going to show you how easy we tackle the question for cash flow statement, solving the cash flow. So here we have a cash flow questions. So you can see that I'm coloring. I'm using the color coding for the debit credit. So here all the assets actually for the cash flow we have to be given two sequence year, which is the current and the past year. Yeah, and then the questions I already color is for the debit balance, which is according to the yellow. This is actually the debit balance every time we provide our T account. Alright, so whereas for opening balance for the asset and closing balance for the equity. Alright, so the cash flow statement is for indirect method. So we're only given the financial position for the 2 years, sequence year, which is current year and last year. Alright, so whereas for the closing balance for the asset must be credit balance. So I'm coloring the credits as a red or pink, and then whereas for the equity, the opening balance will be the credits or the pink color, which is the credit balance. Alright. Okay, so here the next one we are going to have the additional information. Alright, the additional information we must have the debit credit, and then now we can begin. So we are going to begin with the name of the title, which is the cash flow statement for the year ended. So we are using the indirect method because we only provided with the financial position for the 2 years, right? So the cash flow statement, we're starting with the operating activity. So we are going to find out how much the inflow and outflow due to this activity, the operating activity, which is a day-to-day activity in the business. Alright, so the cash flow operating activity here, we are for the indirect method, we are going to have profit before tax as the first element. And then we are going to do adjustment. There are 3 adjustments I already divided. First one is you have to adjust back investment income. The investment income have to be deducted from profit before tax. Alright, so this is in order to get the profit before tax. And then you have to minus, you have to deduct the investment income, then you have to minus, you have to add the finance cost. Then next you have to adjust for non-cash item, which any transaction that you recorded as a revenue expenses which is not involve cash, right? Depreciation, gain or loss on disposal. And then you are going to leave some space in order to arrive profit before working capital changes. Right? So what are the capital changes? So next we are going to consider capital changes, which consists of current asset and current liability. So we are going to look at the changes, which is the increase or decrease by comparing the opening balance and closing balance. Yeah, so we are going to have these 3 first items in the working capital changes, like trade receivable, trade payable, and inventory. We may also have accrued or prepaid expenses. So we are going to slot that one after we see that one later on. So next we are going to arrive at the cash flow from operation. Yeah, cash flow from operation, actually the main flow of the cash from the main operation of the business. Alright, so we are going to consider afterwards is your interest paid, which is you pay for the year, and also your tax paid, which you must pay at the end of the year. And then therefore you are going to arrive at the, what you're going to find out at first place is how much is the net cash flow from operating activity. Okay, so we have to show how much of them, whether it's inflow or outflow. Whether it's the inflow, you must have to have the figure, and if it is outflow, we have to bracket the figure. That's one of the statement is all about. And then next, after the operating activity, we are going to consider the investing activity. Alright, so the cash flow from investing activity, yeah, is about the cash flow involved in the increase or decrease, inflow or outflow of the cash involving your non-current asset. Alright, whether you purchase that year or whether you dispose. So we are going to find out from the investing activity, and we also have dividend received, part of the investing activities, right? And then we are going to leave some space here because we are going to slot in whatever we fund from our working to get net cash flow from investing activity. Alright, so next, the last one, you are going to look at the cash flow from financing activities. This is all the item we can find out from the SoftPayO's financial position under financing, which is any increase or inflow or outflow of the cash due to the financing, like you issue share, you issue borrowing, you acquire borrowing, or you all the under financing activity, which is non-current liability and equity. Alright, so you're going to arrive at the net cash flow from financing activities later on, after considering all the items from the transactions for the year. And then from there, we are going to add up all the 3 activities just now to find out the total increase or decrease of the cash and cash equivalent for the year. The cash mean cash at the bank, cash and cash equivalent with the cash or money in the bank, also bank overdraft, and also short-term investment if it is relevant, which it must be really liquidate. Alright, so increase or decrease, we are going to find out mean inflow or outflow of the cash for the year. And then from there, you are going to add to the cash and cash equivalent. Oh, this one is mistake. I think I put some mistake here. So we should add to the cash and cash equivalent beginning of the year. For the year mean there is an increase or decrease in cash and cash equivalent. They are the same thing. So from there, we are going to add to the cash and cash equivalent for beginning of the year, which is the opening balance. Alright, beginning of the year. And then we are going to arrive at the cash and cash equivalent at the end of the year. End of the year. Alright. Okay. So apart from there, you also have to show what is cash and cash equivalent. So we are going to provide notes for our working as well. So in the notes, you should have details of your cash and cash equivalent. Alright. So you are going to show how much your cash and cash equivalent from beginning of the year or the opening balance, and also the end of the year for the closing balance. Alright, so this is the first step you should do, preparing your template for your cash flow, and then we're going to proceed to the next one. Stay tuned.